Hello and welcome again. In this video we'll look at some trading profit adjustments. Now what the trading profit adjustments are, I want you to go back and remember your F3 studies for a little time. So at F3 or even F2 as well, management accounting or financial accounting, although I'm not very good at accounting, I would assume. So what used to happen was that while making the profit and loss account, or you can say statement of comprehensive income, what we used to do was we take the revenues and we deduct the cost of sales, and then the GP, and the final figure was a net profit. While deducting the expenses, there were lots and lots of expenses, if you remember. So actually I will show you on the board as well. So what we used to do as our accounting studies. So what we used to do was we used to take our revenues, whatever our revenues were, then we used to deduct a cost of sales, and under the cost of sales there were, I don't know, lots and lots of expenses, and I would assume after deducting all the expenses, our figure was net profit, or you can say, the net profit is the proper word, to be fair. So what we used to do was we used to take our revenues, and then we used to deduct our cost of sales out of that, and the net figure is net profit. Now that was our accounting profit, if you remember, because we were making our accounting statement. Now when we are making our accounts, when we have started the business, say for example if I've started business somewhere in June. So when I started my business, I did not know anything about taxation. So what I did is I just started business, and then I made my accounts as well, like that. So when I was making my accounts, I did not know anything about taxation. I did not worry anything about tax year. So my accounting year, to be fair, was whenever I started my business. So I made my accounts to 12 months or whatever, because it was up to me, right? So that was my accounting profit, because it was up to me. So whenever I wanted to make my accounts, and whatever date I may choose, it's up to me. There is no restriction. But this is our accounting profit, right? Though there are different things which are deducted, which are not allowed in the taxation, which are not allowed by HMRC. And there are some things which are not deducted out of this profit, but what HMRC says is that you can deduct these things out of this profit. Likewise, there are some incomes which are not part of this statement, which HMRC says that they should be here. And on the other hand, there are some few incomes which are listed here, which HMRC says that they should not be here. So I will give you an example. Say for example, there was no capital allowance here, which HMRC says that you should deduct the capital allowance out of that. So because it is not given here, so we'll have to deduct that. So in order to make some adjustment to this accounting profit, so what we do is that we make another statement, which is which we use for the tax purposes. Now this tax statement will be the one which we use for the HMRC purposes. So what we do is we take this net profit here. So we take this figure here, net profit. Then we do different adjustments with that. So we'll add back any expenses which are deducted here. So we'll add back them expenses. And likewise, we'll add some income as well, which is not added here. So we'll have to do some adjustments to this net profit figure. Now, after making the adjustment to this net profit figure, the final figure which we will get is that will be the one which we will use for our tax purposes. All right. So I will just share the screen with you, and we will look at the different elements which is part of our trading profit adjustments. All right. Now if you could please come to page number 18 of your lecture notes. As you can see on your screen, that is trading profit adjustments. So what we do is we take our net profit. Now these are the adjustments which we are making for the tax purposes. All right. So it says net profit before tax as per accounts. Now this net profit figure, which you can see on your screen, from where the chapter starts, it says net profit before tax as per accounts. Now this is the figure which we will take from our accounts. This is the figure which I showed you on the board here. This was our net profit while we made our accounts. All right. So we'll take this figure and we will do some adjustments to this figure. So what we do is, first of all, we will add the expenses charged in the accounts which are not deductible. So what happens is that we will add back all the expenses which should not have been deducted in the first place if we would have made the accounts from tax purposes. All right. So there are some expenses here which should not have been deducted for tax purposes. So what we do is we'll add back them expenses. So what are them expenses? Now just see beneath that, which is this is the list of expenses which are not deductible, or sometimes known as not allowable. So the list goes and goes. Just read it for yourself because I cannot go all of them. I cannot go through all of them. So please make sure you read that list. So all of them expenses will be added back. Now remember that this chapter is very, very important. So you will have to remember this list which is given beneath that. I will include almost everything which is important from exam point of view. So you'll have to remember these things, and everything, say for example, if 10 items are given in the question, out of that list, say for example, fines and penalties, depreciation, amortization. So if you find 10 of these in the question, every single item will earn you half a mark. So these are very, very easy marks, but you just need to learn this list, and that's it. You will secure very, very easy marks. All right. Now next thing is which we add here in the list is income not charged in the accounts which are taxable. Now some things, some of the income which are not added in this list while we made the accounts, some of the incomes are not added here. So what we do is we add those incomes because HMRC says these incomes are chargeable to tax. So what are them incomes? This is only one income. So what we do is whenever we withdraw something out of our stock, that is called drawings, isn't it? So when we take the drawings, we'll have to when we take the drawings, we do not mention it here in our accounts, do we, when we're making the income statement? So what we do is, for tax purposes, we'll have to take market value of that, because for tax purposes it says it is an income. Why? Because although you are withdrawing it, but you are withdrawing it from the business. So when you are withdrawing from the business, you'll have to take market value, and that will be considered as sales. So that is income. So that's why it will be added back, and you'll have to pay tax on that. Now a couple of things we have to deduct is, first one is income included in the accounts which are not trading profits. Now few things are included here, some sources of income, like say for example you can say capital gains tax or any capital asset sold. So there are the things which are included here, which HMRC says these are not trading profits, and these need to be deducted out of this total. So what are these things? Income on the sale of assets, rental income from property, premium received on the grant of lease, interest, and the dividends received. So these are the list which you may find any of these in the accounting profit. You will have to delete these if you find any. Again, everything each and everything you see will earn you half a mark. So it's very, very easy. And the last thing is that expenses not charged in the accounts which you must deduct, and that is only one expense, which is capital allowance. You will definitely find capital allowance in each and every exam sitting if you find one of these questions. So capital allowance is very, very important. And likewise, the first list is also very, very important. Expenses, because definitely when we're making the accounts, you will definitely you will definitely see some of these expenses, and so you will have to add these expenses back to the income statement, right? And there are a couple of notes as well. Any expenses not in the above list are allowable, and you must ignore them. And sometimes what happens is that if deductible expenses are not included in the accounts, and then you must deduct them. All right. So that is end of our chapter. The next chapter, which is chapter number 2, is a little different approach, which is on the cash basis, and that's very, very easy as well. You are likely to get some of the theory questions on this chapter. It's just, I think, a couple of pages, or actually it is just 1 page long chapter. I will just quickly go through it with you. So what happens here is you take the cash receipts, and what you deduct is cash payments, and the net figure is going to be either of a trading profit or allowable loss. Right? So it's very, very easy. Just read it yourself, and you'll have to learn this thing by heart, and you're likely to get a few things out of that in your exam, especially in MCQs, theory questions. All right, so that is end of our lecture, and I'll see you in the next video. And we'll do some more stuff of ACCA F6 taxation. All right, thank you very much, and goodbye.